Hello, what's up traders? So today in this video I'm going to show you a unique candlestick that you can use as a confirmation when you are trading. So this candlestick, it happens majority of the time whether lower time frame or higher time frame, but when you are using it on higher time frame you have a better chance of winning your trade, you understand? So I'm going to show you this type of candlestick. It is not the usual type of candlestick that you have been using before now. So this type of candlestick, it forms virtually weeks in, weeks out throughout the month and throughout the weeks. So they happen every time on your chart, but you may not notice it. You are only focused on the supply and demand and the support and resistance, but you can use it as a confluence. You can use it in conjunction with your support and resistance and supply and demand, so that you can stand a chance of winning more trades, you understand? So let's go right into the explanation. So as you can see, I have this thing drawn already. I'm going to show you a live example on your chart, but let me explain this thing right now here. So this candlestick, the number one here, this number one, number two, number three. So when you see this type of candlestick that has a longer body and a lower wick and a shorter lower wick and shorter upper wick, when you see it on resistance or support, if you see it on resistance, aim for what? Aim for sell. If you see it on resistance, aim for sell, especially on a daily time frame and 1 hour time frame. The next candle that will fall right, maybe a little retracement. It sometimes it will not even retrace long, it will just come back. Sometimes it will retrace to 50%, somewhere around here, 50% of the candlestick, 50% of the candlestick before it will start forming, coming down. But in most cases, sometimes it will not even retrace back, it will just come down straight. So when you see this type of candlestick on resistance, aim for what? Aim for sell. And vice versa, when you see it on demand support, aim for what? Buy, you understand? So this is it for this candlestick. Let's go to the number two now. This number two candlestick is a kind of candlestick that has a longer body, you understand, and a longer wick. One of them has a longer wick, depending on where you are seeing it. If you are seeing it on support, like this one is mostly found on support, or demand. Support, this one is support. Support, support. So this one is basically found on support zone. So when you see this type of candlestick formed on support zone, the next push now is going to be what? Upper. The next push is going to be what? Bullish pull movement. So when you see this type of candlestick formed, what you should target, have it in mind that this longer wick is going to be filled. Sometimes it will just fill with just the next candle will be filled with just single candle, and it will fill these wicks. Sometimes it will take 2 or 3 candles to fill it, but have it at the back of your mind that 90% of the time when this type of candlestick is formed, it is going to be what? To be filled. The wick is going to be filled. Likewise to the one that is found at resistance, like this one, it is normally formed at resistance or supply zone. When this one is formed at supply or resistance, it This one is for resistance. When this one is formed on resistance, you are expected to look for what? Sell. The next candle will form right, just a little retracement, and it will start forming downward to feed this candlestick. So this thing I'm telling you, just watch it from the daily time frame. If the efficacy of this candlestick is high on higher time frame, so when you see it on higher time frame, like the 1 hour, no, like the daily, the 4 hour candle, 4 hour time frame, and the weekly time frame, you just have it at the back of your mind that a retracement is possible to occur, you understand. So it has a higher chance of occurring when you see it on higher time frame. I hope you understand it. So let's go right to this number 3. This number 3 is a kind of hammer, but it's an unusual hammer with a longer wick. So majority of the time when this thing occur, it happens when there's a major news in the market. That is when you see this type of candle forming. So when this kind of candle is formed in the market, depending on where it is formed, maybe at resistance or at support, just like this one that I just explained, like this one. So when this one is formed maybe due to a high impact news. So when this one is formed maybe on the daily, the next day if you are coming to the market, have it in the back of your mind that this week, this long week must be filled. Sometimes it will take a single candlestick to feed this. Sometimes it will take 3 to 2 candlesticks to feed this, but have it at the back of your mind that this candlestick is going to be filled. You understand? So if you have spotted this type of candlestick, what you are expected to do is to go to lower time frame. Maybe you head to your 4 hour, your 1 hour, your 30 minutes for confirmation. After you must have drawn your zone and every other thing, wait for confirmation at that place to take your trade. This like this one I just like this particular one I explained. This happens at the what? The support. This happen at support zone, support. I hope I'm spelling support right, but I hope you understand it. So there's no big deal. So this particular one is form what? At at no, sorry, this, sorry, this is formed at what? Resistance. This particular one is formed at resistance. So when you see this at resistance, aim for what? Sell. And when you see this at support, aim for buy, believing that it will feed this candle. It happens 60%, no, it happens 80% of the time, 90% of the time this thing occurs in the market. Don't doubt. I don't care whatever you have been told in the market or whatever you have learned. Just go and search this thing I'm telling you. It can help you when you couple it with your strategy, you understand. It can help you as a confirmation. So just go and check this thing I'm telling you. Check it from 4 hour, weekly, and daily time frame. This is the time frame that this thing occurs. So let me go to one of the chart and show you this thing I'm talking about, like the JBP candle, the JBP JPY that happens today. Let me show you. Let me go to the weekly candle. Let me show you on the daily time frame so that you can see it. Daily time frame, daily time frame. daily time frame, daily time frame, daily time frame. So this is it. This is the candlestick that I'm talking about. This is the candlestick. So you can see that this particular candlestick forms with what? This particular candlestick has a longer lower wick and a shorter body. So when this type of candlestick is formed, maybe during market close, if you see this type of candlestick during market close, what you are expected to do as a trader is to have a mindset that this thing is going to feed the week. You understand? You understand? Although this is Friday, it has filled it with one candle. So if eventually this candlestick that you are seeing, this candlestick, that daily candlestick of the Friday ends like this, on Monday, have it at the back of my mind that this week may be uh, filled completely. You understand? It may not happen fast, but with time it will fill it. You understand? So I will show you another example. Let me go to let's go to another side. Let me show another example. Let me show you another example. This is another place. This is another example. This particular candlestick, it has a lower wick. You understand? So the next day, sometime the candle that will form the next day will eventually sometimes to retrace to the 60% or 50% and come down, sometimes to eventually reach to this extent, but have it at the back of your mind that there's a kind of gap that needs to be filled. So and you see it, eventually the market fills it. So this is the kind of candlestick that I'm talking about. So let me show you again. This is another one. Especially guys, let me tell you another thing. When this type of candlestick is formed and maybe it is bearish candlestick, for example, bearish candlestick at a resistance with this kind of long wick, it will eventually feed it downward. Let me show you. So this is another example. It is formed at what? A resistance turn support. This is I mean a support turn resistance. You understand? Support turn resistance. This is a previous support that has turned resistance. So this thing form, and when it form, the next candle follow it downward to feed this candlestick. So if you wait, if you're a patient trader and you wait for a daily candlestick to close, definitely you are going to benefit from this candlestick. I'm telling you. See another example here. This another example, like this example here. This another example. You can see it has what? A it has a longer body with longer wick. So the place that the wick has a longer wick, longer this thing, longer that the wick is extended to, that is the place the market is expected to extend to. And again, you can use the normal trading style to even use it as a confluence like this. This could act as a support. You understand? This could act as a what? Support for this candlestick. This is an impulse retracement with this type of candlestick that I'm showing you. So you are expected to buy the market. So if you use this in conjunction with your strategy and every other thing you are using, trust me, you are going to win a lot from the market. So this is it. Let me go to another pair so that I'll show you so that you know that this thing does not only happen on JBP JPY. Let me go to another pair. Let me go to another pair. This is Euro USD. Euro USD. This is Euro USD. Euro USD. You can see it here. Euro USD. So this is another example. This is the candlestick here. This is the candlestick here. Once it forms like this with a longer body and with a longer lower wick, so the next candle will start by forming what? Going to that towards that wick side to complete it, you understand, to form another bearish candlestick. So you can actually use this thing to take your daily bread from the market. Then this is another candlestick that I showed you earlier, the first one, if you could remember, the first one that I showed you. This is another one that has what? Shorter upper wick and shorter lower wick. When this type of candlestick is formed, we are expected to what? Look for sell opportunity, because the next candle is going to be a bearish candle and eventually it will feed it down to this place. So let me show you another example. You can use this thing with other strategy, liquidity, or any other thing to grab the market and take your daily bread from the market. So let's go to another pair. Let me show you 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 another pair, right? So guys, let me show you another pair. You can see this place. See this place. See this candlestick. This candlestick has a lower wick forming at a resistance. If you check it critically, you will discover that this candlestick has the lower wick, which is very long. So the next candlestick that is going to be formed, it will just retrace to maybe somewhere around this place, and it will eventually start falling over the next period of days. You can see it. To feed this wick, it has to fall for how many days? 1, 2, 3 days before it start forming another market structure. Look at this one. Look at this example again. Look at this example again. This another example. This another example. Let me go to USD card, another pair, so that unconventional pair, to show you that you can see this thing on many pairs. Many pairs. You can see this thing on many pairs. I believe, yes, you can see it on many pairs. Look at it now. Look at it. If you are used to this thing, you can easily spot it. Look, the place that has the longer wick, the market will tend to go to that place. You can see it. This is the place that has the longer wick. After this bullish candle close for that day, the next day the market retraces to 50% of that candlestick and it starts going bullish again. You can see this market. You can, guys, it's just plenty. You can go through it yourself and you understand this thing. You can couple this strategy with any other strategy you are using and use it as a confirmation, even on lower time frame. it works, it works, it works, guys, it works. Let's go to card JPY, for instance. Card JPY, card JPY. Although I don't trade all those pair, I trade only JPP USD, JPP JPY, sometimes Euro USD. But for the sake of you guys, let me show you that this thing actually happens in every market. It happens in stock market, any other market, any market that is volatile. You can easily spot this type of candlestick there, whether crypto or anything. Let's go to see today on. See another example of this candlestick here. You can see it. You can see it right, forming right with in your eyes. See it. See the candlestick. You can see it. You can see it. So you can use it as an overall bias on the market. You see it when the candlestick forms the place that has the longer wick, the market will tend to fall to that place. Let's see another example. Let's see another example. This is another example here. This is another example. This is another example. This place, you can see the market has a longer lower wick. So you are expected sometimes it will retrace to the top, sometimes it will retrace back. The next candle will retrace back and above the first candle, but that doesn't change the bias. You understand? Because the overall trend is still what? You can see the overall trend is still downtrend. So it's still downtrend, and you are seeing the kind of candlestick that I'm talking about. You are spotting it here. So even if the market retraces and goes above the candlestick, just wait. If you go to lower time frame, you are going to see a confirmation that is going to actually give you a confirmation that this market is going to fall in conjunction with your daily bias already that you have gotten from this type of candlestick. So you can use this and make money from the market. See another example here. See another example. This another example. This another example. You see this place that has the low a longer upper wick. The market tends to go to that place. You understand? In conjunction with supply and demand. See supply. See supply here. Supply zone right here. You can use this. Can use this supply zone with this type of candlestick that has longer upper wick. So the next day the market tends to go up. So you can spot this market in many occasions. So but you shouldn't just rely on this candlestick alone. You should just use it a kind of confirmation. You understand? Just use it in conjunction with your strategy. The best thing in market is to just know structure, understand structure, understand how the market is forming, understand when the market has turned from bearish market to bullish market, and when it has turned from bearish to bullish, vice versa. Just understand the structure. Once you understand the structure, you can put this thing together to spot an opportunity in the market. So that's what they call an edge. There's nothing there's nothing less. So that is what you should understand in the market. Just use this thing and you are going to win a lot of opportunity in the market. I can go on and show you another place. Let me show you Euro JPY, for instance. Euro JPY or Euro AUD. Euro AUD. Euro AUD, for instance. Euro AUD. I think this video is getting longer, but guys, whatever it is, just stay and just learn something. Euro USD, I can actually spot one here on the daily time frame. I can actually spot on the daily time frame. Look at this. I told you sometimes to not fill with one candle. See it right here. You can see it forms on, this candle forms on Wednesday. This is Thursday. Thursday candle couldn't fill it. Now this is Friday. You can see it. You can see it. Although it's not fast, but you can see that the market is actually trying to fill this place. So if you spot this type of candlestick and you're trying to sell, my brother, you'll be in deep mess. So that's why I'm telling you guys to always check for the bias on the daily. Don't just stick to only one time frame alone. Just stick to lower time frame alone. See what is happening in the daily candle. See what is happening on the daily time frame. So you can actually see it here. Let's look at another example here. This place has a lower what? A lower wick, which is very longer than the upper wick. So you can use it and take your daily bread from the market. Look at another example. This is another example. This is another example. The place that has the longer wick, the market will tends to go to that place. So guys, thank you for watching this video. Do well to subscribe to my YouTube channel for more updates. You understand? Thanks.